So great to be here. This is the second time I'm doing this. I think we had a conference 2 or 3 months ago, right, Ariel? So it certainly seems to be a space that's heating up locally. We, the Bank of Israel, so first something about my role on the management of the Bank of Israel. I'm as Director of Payment Systems. All money that flows through the country ultimately flows through the RTGS system, which we operate. And we also supervise external payment systems where money flows, be it wire transfers through the National ACH clearinghouse known as Masav, be it card payments and others. And as a result of that, we have quite a good view of all money flows and payment systems and means of payment or methods of payment that are used locally. We are also quite active, especially in the last year and a half, in the crypto space, both trying to understand what's happening and where we think the market should go, engaging with other regulators and other central banks across the world, and trying to advise each other as regulators. So I have a quick deck just to show you a little bit about how we think about this space and what we are actually doing. So when we talk about digital assets, okay, I guess the slides were supposed to be in English too. Apologies for that. Those who don't read Hebrew, there are some English words here. So we can put them into 3 categories. Central bank digital currencies, stablecoins, and cryptocurrencies. I'll say a few words about each before we dive in a little bit more. So I think generally this community does not necessarily think or concern itself with what has become known as central bank digital currencies. We call it in Hebrew a digital shekel, or shaked, shekel digitali, which is actually a concept that is being explored by dozens of central banks around the world. So the main thing central banks did historically when they got started was create money, print money. And to this day, all central banks do that. They are banknotes made of paper and coins made of metal. Why are they not tokens? Should they be? It's an interesting question, and it's a question that is becoming more and more relevant since we as central bankers understand that the world is going to digital currencies. There is some very interesting technology with new features that are very much developed here in Israel, using distributed ledger technology, blockchain, and so forth. But we also ask the question, if we do this, we don't know if we should go to a digital shekel, but if we do this, should we use DLT or blockchain? Is that really necessary? It's almost an assumption when you talk about digital currency in other contexts. When it comes to a central bank, it's a good question to ask. And so it behooves us to take a closer look at the types of things that are already happening in the cryptocurrency space and decentralized finance, and are these things that we think should become available using fiat currencies as tokens, central bank digital currencies. And again, as I said, this is a global phenomenon. All central banks are working on this. All of us know that if we make a decision to issue a digital currency, it probably will be one of the most significant decisions we will have made as a central bank in the history of the central bank. And that statement applies to central banks in countries where they've been around for over 100 years. We're a little bit younger than that. It is quite a historic decision. And yet, it's not clear that we should go in that direction. But part of the question is, when we think about it, what would it look like technologically, and what are the implications for financial stability? We have another very central role, which is to manage price stability, monetary policy. And one of the ways we do that is we manage the amount of currency in circulation. And so will this help or make it more difficult? Is it perhaps a defensive measure against other cryptocurrencies? These are big questions that are being asked, and they do somehow interact with the dialogue some of you are having about the benefits and disadvantages of working in a sovereign currency versus a non-sovereign currency. Another question is, how does this impact the banking sector? Should a digital government-issued coin or central bank-issued coin work with the bank system, alongside the bank system, and what kinds of implications will that have for a national economy and stability? So for those who are interested in this absolutely fascinating topic, we have published a number of papers in Hebrew and English, by the way, but we're not the only ones. Central banks around the world are doing this. Teams are forming. Teams have already formed. And there are hundreds of people around the world working at central banks trying to understand this question from every perspective, every one of the things that I mentioned earlier. So I know when you talk about cryptocurrency, you're not necessarily thinking about money issued by a central bank. However, it is interesting to pay attention, and if you are a technology provider, pay close attention, because many of the central banks are engaging technology companies to understand what is it that we should be doing, and maybe we should start some pilots to test some of these ideas, use some of the expertise that we have in Startup Nation and in other countries. So next category, stablecoins. So you've all heard this word, and we know there are many forms of it. It is a bit of a misleading word. A stablecoin is a digital currency, digital asset, or as they call it in the EU, an asset reference token, because they're avoiding the word stable, which is pegged to an asset that holds itself out to the world as being stable. Are stablecoins truly stable? I think we saw in the last couple of weeks, big question mark around that, and lots of questions around the mechanism used to keep the currency stable. So if there's a stablecoin issuer, as there are some, that takes 100% reserve, one fiat unit, be it $1 or a shekel or a euro, held in reserve for every one unit offered to an investor, that might be stable. That's probably more likely to be stable. But if the issuer starts doing other stuff with the assets that act as a reserve, and if they keep less than 100% reserve, is it correct to view it as stable, and how should it be regulated? It's a very interesting question. It's a huge topic that, again, central banks around the world and the regulators in Israel are asking ourselves. And the last category, which you know well, is what we call programmatic or algorithmic cryptocurrencies, the best known of which is Bitcoin, but as we all know, there are thousands of them. And how should those be viewed and regulated? So I am here as a representative of the Israeli Central Bank. Let's tell you about the few of the things that are already happening. I mean, I want to mention first, somebody just told me, and I missed it, but I looked it up quickly before coming on the stage. The FATF, the Financial Action Task Force, which is a global intergovernmental body of anti-money laundering and terrorist financing entities, published that Israel isn't actually in good shape in terms of preventing money laundering and terrorist financing. And that should actually be helpful to the crypto community, because to the extent that we are able to track the source of funds, it should be easier to move money in and out of the banking system, because that does lower the AML risk. So that was good news. And also just kind of, headlines, you're probably aware, but I think it's worth mentioning. There is a major bank that has announced that it will enable its customers to buy and sell cryptocurrencies subject to regulatory approvals, of course. And there are two major Israeli credit card companies that have also announced products in recent days which will enable various types of commerce, without going into the details, in cryptocurrency subject to regulatory approval. And usually when they say that, it probably means they haven't gotten the regulatory approval yet these entities feel comfortable coming out with statements like these in the media. And we also have a number of entities that have a license, hemshech isuk, however you say that. So they had a license to engage in some type of financial activity from the Capital Markets Authority. They do not yet have a license to act specifically in crypto, but yet they are able to continue to do so using the prior license that they had. And I checked with the Israel Capital Markets Authority. There are about 10 entities like this that are currently offering services in Israel. But if we look a little bit more specific, we have something in Hebrew called Tzav Isur Halbanat Hon, which is an order that prohibits money laundering, which is applicable to entities that were licensed by the Capital Markets Authority, which include crypto exchanges. So that is actually a result of our local AML authorities' membership in the FATF, this global organization, which said, okay, we're gonna announce this thing called the travel rule, which means you need to identify the source of funds and the route of the funds, where they came from and where they went. And they asked all the member countries, there are 200 member countries, to enact legislation implementing this rule. And that legislation became law in Israel in November. That should make it easier for banks to accept proceeds from the sale of cryptocurrency because the source of funds has been tracked. Related to that, the supervisor of banks at the Bank of Israel issued an instruction, instruction number 411, which we believe is the first of its kind worldwide. We haven't seen this in any other jurisdiction. And what does it say? It does not instruct banks to accept the proceeds of the sale of crypto because there are AML issues. Let's be real. There is terrorist financing, there is money laundering going on using cryptocurrencies, and we need to be very attentive to that. And yet, we don't want to shut down commerce by Israelis completely, and there's lots in the press about this topic. And so what Instruction 411 says is to the banks, manage a risk policy, taking a risk-based approach, including with respect to cryptocurrencies. You can't just say no. Take a look at the specific scenario and come up with a policy that enables you to manage the risk, but just doesn't give a blanket statement disallowing deposits. Note, for clarification, because this was misinterpreted at the last conference, so I want to make sure it's clear, this applies to individuals, not to companies that whose main business is cryptocurrency commerce. This is designed to help individuals who invested in crypto, sold the crypto, and want to deposit the funds in an Israeli bank. Banking services to crypto companies, and I'm telling you this based on numerous conversations we had with banks around the world, that is quite more complicated, and there are many fewer banks who feel comfortable taking that type of risk. It is quite a specialty with its own expertise. There is case law on this subject. The case law which predates these other two regulatory acts, and that case law basically has decisions saying something similar. There is one decision that says banks may not take a black and white approach. You can't just say no cryptocurrency proceeds may be deposited. It needs to kind of be more risk-based based on the particular scenario. And there's another case that took a look at the facts and said, you know what? This bank managed its risk, and when it said, no, I don't want to accept these proceeds because I'm worried about AML and terrorist financing, that was a reasonable decision. So it's not black and white, but it is certainly a topic that's being reviewed, and now it's also has some clear rules around it. The Israel Securities Authority, Rashut ניירות Erech, has ruled that investments in cryptocurrencies are securities, so it's not a payment method. Why is this important? Well, if you think about a payment method or a means of payment or a fiat currency called something strange, a US dollar or a euro. Let's say I bought dollars and their value increased vis-a-vis the shekel because of the exchange rate. Does that create a tax event, a capital tax event? No. However, if the digital currency appreciated, it's like a stock. And when the stock appreciates in value and is then sold, there is a tax event. That's one aspect of the ruling. But it does relate to my next point, which is the Israel Tax Authority, which ruled that capital gains tax applies when digital currency is sold, even when it's sold for another digital currency. So if you take money out of your bank account in Israel, put it into a crypto exchange, with that money, you convert your shekels. Usually you need to convert them to another type of currency. Let's say you convert them to dollars, and then with those dollars you buy Bitcoin, and then you sell the Bitcoin for a profit and convert it to Ether. That is also a taxable event. But now you can also repatriate the funds using Rule 411 and pay your taxes. A couple other things. The national, the chief economist at the Ministry of Finance has been tasked by the Minister of Finance to engage all financial regulators, including the Bank of Israel, and request our position on cryptocurrency and digital asset related topics in order to formulate a view on what a broader set of regulations should look like. And that is a process that is currently in flight and moving very quickly. And we also, I personally, as well as Shiri, who's here in the audience, who works with me, lead an interregulatory team. We have about 10 government agencies, including the Israel Tax Authority, the Israel Securities Authority, the Capital Markets Authority, the Anti-Money Laundering Authority, the police, the Ministry of Justice, there's others. All of us get together, talk about this topic, trying to make sure we're coordinated, and we also bring external speakers, including some of yourselves, to teach us to make sure we're up to date on what we need to know both technologically and policy-wise. I know I'm almost out of time. Can I get another minute? One more minute. So, questions we ask ourselves about what should be considered when we think about regulatory policy. And again, we're not alone. We do engage with regulators in other markets, and we know that everyone struggles with these questions. So when it comes to a stable coin, it's a platform that is supposed to be pegged to a stable asset. Question about the mechanism, whether that is actually true or not, but it also enables multiple players to buy and sell assets. Is that a payment system, or is that a bank? Because remember, we talked about them holding a reserve, which is not always 100% reserve. Or is it a combination of the two? What are the regulatory principles that apply? Do we need completely new rules? How do we prevent regulatory arbitrage? If you get a license in one place, which is a little different from another place, as an entrepreneur or a business, how do we make sure that the rules are consistent depending on where you get your license? How do we make sure that the regulatory burden is reasonable? Lots of talk in Israel about, well, it's a small market. I'm not going to spend, as an entrepreneur, we are told, they're not going to spend all their resources in complying for a small market, and so we're not going to act locally. Okay, is that a good thing or is that a bad thing? Do we need to make sure the regulatory burden is reasonable? We think we do, and how do we do that? And then the other big question is, since we have quite a robust technology sector in Israel, startup nation after all, now we're calling ourselves scale-up nation with some very significant companies growing here, including in the blockchain and crypto space, how do we help that grow and make sure it continues to fuel the local economy while at the same time looking after financial stability and price stability? And these are significant questions, because first we need to make sure that the economy is stable before we look at all these other goodies. So that's all kind of very quick, but it does give you an overview and a sense for the fact that there is a lot happening locally. Don't believe what you read when they say that regulators aren't doing anything about this in Israel. We actually are, and it's not a coincidence that the FATF concluded that Israel is quite well advanced. And we're ready now from a regulatory perspective to take the next step. So thank you.